Let's get started with our first panel session titled FIMM30 and Beyond. Our first speaker truly needs no introduction. We have the pleasure of having our chairman, Mr. Ridzal Muhammad Sharif, and joining him for the first panel session is Mr. Kaleon Leong Rahan, CEO of FIMM, and I'm excited to let you know that I will be moderating this session. Please welcome them to the stage. So the title for our first panel discussion is FIMM30 and Beyond. It is quite an incredible milestone, 30 years. Let's kick things off with some reflection, perhaps. When you look back at FIMM's journey for the past 30 years, Ridzal, how would you describe the transformation of the industry then and now?
Thank you, Cynthia. Good morning again. I think if we look at one of the slides that we have in relation to the growth, it has been a modest beginning, and over the years it has actually steadily built up. I think it was the first slide. Steadily built up the AUM base, and what you can see is that there are no real huge spikes or troughs in the development. So what it indicates to me is that there is a level of investor understanding, investor appreciation, where you see a steady growth over that period to become the industry that it is, in the size that it is today. It also shows that there is a greater understanding of the different asset classes wherein a unit trust and the pension funds industry is a long-term investment type product. So you don't see, again, very volatile movements in terms of its size of growth. So I think that bodes well for the durability and resilience of this industry as a whole. I don't know if Kaleon has anything else to add to that.
Perhaps, Kaleon, 30 years is quite a long journey, but perhaps you can share what you think are some of the significant milestones of FIMM and how has it contributed to the growth of the industry?
Thank you, Cynthia. Good morning, ladies and gentlemen. Thank you, Ridzal. This last 30 years has been remarkable for the unit trust industry. If we look at it in terms of World Cup years, it's actually 7.5 World Cup years. Unfortunately, I can't get this slide to be aired here. But basically, when we look at the last 30 years, it has been only upsides most of the time for the unit trust industry. So I think if we were to equate it to World Cup again, probably we would have won it like 5 out of 7.5 years. Okay. The interesting part is that 1993 was a very good year. SC was established, so was FMUTM then. And during that time, until now, we have gone through 3 crises. Not many industries can say that they have gone through 3 crises and came out of it okay. So we've gone through the Asian financial crisis in 1997, then in the global financial crisis in 2008, and also the recent pandemic. If we look at the recent pandemic, what's interesting is that it was the best time for the unit trust industry. In terms of unit holder accounts, it grew by nearly 10%. So there was 2 million new accounts created. In terms of net asset value for the industry, it went up by an all-time high of almost 530 billion ringgit. So this actually shows that it has been a very resilient one. I don't want to deep dive more into it because I understand the upcoming panel sessions will actually talk about how this resilience has spread across the industry, how it has benefited more than 30 million unit holder accounts there, and also how it has benefited a lot of people in terms of job creations.
Now, just a quick reminder that we will be taking questions from you, the audience, virtually and physically. So just what you need to do is just scan the QR code to submit your questions via Slido, which will pull up a bit later. Now, I do want to talk about one of the significant things that I came across while preparing for this session is when FIMM was recognized as a self-regulatory organization, SRO, in 2011 by the Securities Commission Malaysia. In fact, now it was a very pivotal moment because it marks the first time that FIMM began to play a dual role in the industry as an industry player as well as a regulator. How has this approach or this SRO shaped the approach of FIM from then on since 2001?
Okay. You see, FMUTM way back in 1993 was a trade association. You had members who were from the unit trust industry who had a lot of ideas and aspirations to develop the industry. But as a trade association, you will be very heavy on the thought leadership and market advocacy roles. So when we became an SRO in 2011, we had to start looking at more investor protection element. Okay, ironically or coincidentally, I was working with the regulators then and had a chance to work on the birth certificate for FIMM's role as a SRO. So what we envisioned, or when I was working at the SC, was that FIMM had to do more investor protection elements. I give you an example. If you look at this chart, the yellow bits refer to new things that we try to introduce every year to ensure that there are more investor protection element as far as the unit trust and the private retirement scheme industry goes. So if you have been noticing from our social media, we have been taking more action on recalcitrant consultants. Okay, one important thing to note is that before I joined FIMM, I used to be, people used to have this perception that consultants are not easy people or there are a lot of issues with consultants. But truth be told, if we look back at the last 6 years, the number of complaints that we have got against unit trust consultants is actually quite small. So if you sum it up, it's not even 1% of the total number of consultants available. So if you look at it here, maybe what I would like to summarize is that we have gone down to the ground. We have audited more people, members, distributors, even consultants. But it is not a fault-finding approach. We have also gone down to educate them about the finer points of investor protection. So from the milestones that we have been seeing, we are engaging more people out there. And at the same time, there are also more consultants coming back to tell us about their perspective. Post-pandemic, they were telling us how they adapted to a non-physical approach. You know, how they have acclimatized with changes in automation, digital changes that have come in. Consultants still have survived. For example, during the pandemic, we have seen more people opting to join this industry, and a record all-time high of more people wanting to take exams. So in a nutshell, I just want to say this, as far as this transition to an SRO stage has gone, it has been a remarkable journey. But what's important is that job creations are there, investor protection elements is there, and most importantly, we are catering to many unit holders or investors out there as far as their retirement savings go. Ridzal, maybe you would like to chip in?
I think that's you pointed out very good things. No, retirement savings, of course, is a problem in Malaysia, and the evolving role of consultants. Perhaps I could get Ridzal to jump in, on the role as SRO. How do you think this organization or federation have helped improve integrity, trust, and standards within the within the industry as an SRO?
I think if you go to the very core of it, it is in relation to the confidence that industry places on an SRO. So I think from the board's perspective, the current board that we have, including previous boards, it's been about trying to build standards and maybe thought leadership to the extent that we become a relevant spokesperson for the industry. And we've evolved over the years where I think in the early years we were building the foundations of it for an organization where I think a lot of guidance was given through the regulatory bodies. But over a period of time, I think we have begun with a little bit more autonomy in terms of building systems, in building standards, in monitoring those standards and disciplinary type activities that are required for our membership. I think at the end of the day, what is important is that you will have certain minimum standards that the investing public can expect to have from people that are licensed and monitored by the FIMM. Certainly that is the overview goal. I think going forward, the idea would be in terms of how we can facilitate industry with new types of asset classes or standards which are being discussed. So I think Dato' Kamarudin mentioned a lot about ESG and SRI, which has become a very big thing in terms of the funds industry in the last couple of years. So there's been a lot of industry leadership from FIMM in trying to look at consultations and papers and expertise so that you aid industry in going forward. So I think it's been an evolutionary process, and what we find in many of the SROs in more developed markets where they play a much more pivotal role in the development of the industry and the standards of the products that they provide. So that's the goal that we would be going after.
Well, thank you for that. We're excited to hear about where do you see how do you see FIMM's role in the future? But before that, just to shift gears a bit, you talk about changing trends, and I do wonder about changing profiles of investors. Perhaps Kaleon can share. I understand you have a survey conducted in 2021. Kaleon, could you share with us insights on how the profile of investors have shifted in the last 30 years? And how has FIM adjusted to their evolving preferences?
Thanks, Cynthia. Prior to this event, we conducted an investment management survey where we interviewed all the unit trust companies and distributors out there to get a pulse of how their investors' taste buds have changed. I don't want to go back to 30 years, but I would just want to go back to the last 3 years. Okay, post-pandemic, a lot of things have changed. If you look at this screen here, I think what is key here from 2021 to 2023 is the word exceptional investor service and personalized attention. Okay, during the pandemic, with your social distancing requirements, physical distancings, curbs, and so on, many investors as well as consultants have come to terms that you need quick information, you need to be attended to, and so on. Okay, we will be sharing this report by the end of this month. But what I would like to highlight here is that the members, as far as the unit trust companies have gone, have responded to this because we have seen in their efforts to automate, to equip, to upskill their consultants or even any distribution channels they have to ensure that they can service their clients at the end of the day with what they need.
Well, could you also talk a bit more about the profiles of changing trends you've seen in the past couple of years, especially because of what has happened with the pandemic? Of course, earlier I alluded to the fact that one of the crises that Malaysia is facing is actually retirement, and many of us actually in Malaysia will outlive our savings, and there's a heavy reliance on EPF as a savings. How do you think this situation has affected investors, particularly in the landscape of unit trusts and private retirement schemes in the past couple of years?
It's not just about retirement savings that we were concerned about during the pandemic. We were also concerned about this specific group of people called vulnerable investors. Okay, if you look at the SC's Capital Market Master Plan 3, you would know that there is a objective or an initiative focused on vulnerable investors. So who are vulnerable investors? Actually, there are many types, people who usually they will associate it with age reasons or cognitive disabilities. But when we did a global sweep of this, we understand that even in the UK, they look at anyone who has been impacted by COVID is deemed vulnerable. So what we did was, sometime last year, we reached out to our members to find out what are they doing to cater for this specific group of investors. These are not just investors who are not aware about investment risk, but they also have limitations, which could be physical or cognitive related ones. So as far as this goes, what the unit trust industry has responded is this. Prior to doing this specific study on vulnerable investors, I would deem the unit trust investment as one of the safest because you have pre-sales, sales, and even post-sales controls. And if you look at it in a nutshell, unit trust investment is the only investment that I can think of where you have a cooling off period for first-time investors. So if you decide that this was a bad investment for me, you still have 6 business days to actually exit from it, subject to certain conditions. So what we did was we work on the bottom part of this thing to have a specific control when it comes to vulnerable investors who have invested into unit trust funds. To keep it simple, what we did was we asked our members, how do you attend to investors who are not financial literate, who are, due to old age, unable to read or understand documents, who are unable to make an investment decision on their own? So what do you do about it? There are some key findings that have come out from this report, which you can get for free on our website. But what's important here is that we note from the control measures taken by our members and distributors is that they have a heart. They are not here to just profit from it. They do ensure that at the end of the day, if you are a very senior citizen, you do not understand investment risks or so on, there will be someone to guide you, and at times they will not even profit from you. Or some of them may even go to the lengths of, I just don't think I should be selling to you because the risk is just too high. So these are key things. But I would also like to take a note here to thank the SC. We have been working with the SC more than throughout these 3 decades on many occasions. For example, in the early 2010, the SC and FIMM did collaborate on coming up with some simple language when it comes to disclosure requirements for investment product. About 2 years back or so, we worked with the SC on some advertising and promotional guidelines to guide our members as to what they should disclose to the industry. So this is an ongoing process where there will be new investors every day. There will be more sophisticated investment products that come up. But I think collectively, we can make a difference and we can reduce that literacy gap.
What would you like to add? Ridzal?
No, I think that's something that we have been working closely with the regulators. I think this is also a global practice to look at vulnerable investors.
You mentioned earlier, Kaleon, about more sophisticated products, but I also have to bring up the fact that when you talk about investor protection, they are more sophisticated ways, especially when it comes to scams pertaining, in the financial industry. I do wonder, how about in the unit trust or PRS space? Have you noticed similar trends where scams are on the rise?
Yes, we do. I would like to view this as a positive thing. Over the last 5 years, the number of complaints that has come to FIMM on unit trust funds has increased. But it is also a function of our social media work where we have created more awareness about our role in handling complaints concerning unit trusts and private retirement schemes. So that has been quite good. But in terms of trends, we have not... we have basically gone all the way to make sure that bad consultants do not come back to this industry, at least in this life. Okay, so over the last 4 years, you can see from our website, we have actually barred people for life because of misappropriation of monies, because of pre-signed forms, false certifications. There are trends. If you look at the supervision reports that we share with the industry, you can see that every year there seems to be a common trend. At this moment, the trend is false certificates. Okay, we take that very seriously. And we have also come up with some investment management standards or best practices for the industry to curb certain of these trends.
Maybe Ridzal can jump in as well. Can you provide some cases of where such breach of trust and integrity has happened within an industry, and what actions have been taken and the outcome of those actions?
Okay. Before I get to that, I think this is a double-edged sword. The positive side of it is that a lot of this tends to emanate from the social media, and that also means that our consultant base in the last few years have been able to connect with their investors. And a lot of that is done in the correct manner, I think giving proper advice over a period of time, using better tools. In fact, a few years ago we had a conference which focused on the technology aspects of it. And you find that people of a certain age group are a lot more comfortable dealing with machines and statistics rather than perhaps an older group, which is more comfortable with face-to-face interaction, advisory kind of thing. So there's a plus side to that. Obviously, the downside is that sometimes you have people who maybe exaggerate, profits, people who are outright scammers, right? Now, in relation to this, we actually have a very robust disciplinary process. There is a disciplinary subcommittee which looks at all the complaints that have been given to FIMM. There is an investigation process, and then of course, we follow the rules of natural justice where we will listen to both sides of the story. I sat in those disciplinary committees in my first few years on the board. Thankfully, I'm not there anymore because it's like hours and hours and hours of deliberations of pening kepala. So, but the good thing is that the outcomes, if we find that there is a deliberate attempt to actually mislead investors, then the penalties can be quite harsh, including revocation of licenses permanently, maybe even suspension. There is, of course, an appeals process and all of that, which we will go through. But the long and short of it is that, there is a means of grievance, a means to address your grievances if you feel that somehow there has been some wrongdoing in the way that you have been, the way that your consultant has handled you. At the same time, as I say, we try and be fair because there's both sides of the story. And there are also instances where consultants are not found to have done something wrong because maybe allegations are not true. Yeah. So I think the long and short of it is that there is a process. It is very robust. It goes from management into a disciplinary committee hearing, into then an appeals process if there is an appeal. So we have seen less and less, or we hope that the numbers become less and less in certain areas, which we are focusing on. A lot of them relates to pre-signed forms, which is an issue. So hopefully that message is hitting home.
Well, as someone that's not from the industry, I can tell you for a fact that investment products can be quite complex, and as well as managing risk to investors. I mean, I look at forms. You mentioned forms. I have no idea what it means, and that's why we need consultants, right? But I do wonder, how does FIMM help equip or empower investors, when it comes to making the right decisions and, just raising trust towards the industry and their consultants as a whole? Kaleon.
In terms of helping the industry, I always feel that it is important that we have this continuous understanding of what the industry pulse is. And we have conducted a lot of thought leadership via all this research and surveys that my team has painstakingly looked at. We have also, in fact, even as we speak, we are conducting a potential segment survey where we are traveling around Malaysia now to interview the people on the streets, selected investors, and so on, to understand about the grievances, like you mentioned, Cynthia, about forms, about the simplicity of investments, about the protection bit, and so on. At the end of the day, we are trying to create this awareness to investors that, hey, it's not just about investing your money into something that generate returns, but also to make sure that they understand the investor protection element. Here we are quite lucky because we do work with the SC and other regulators a lot in terms of making sure that the necessary controls are there when it comes to unit trust and private retirement scheme products. So as what Encik Ridzal has highlighted, most of the complaints that we get, it's not really on the investment per se, but rather the marketing and distribution activities gearing up to the investment process. So for FIMM, it's always to make sure that if you want to simplify it, there must be a check and balance there to make sure. Because there were many times where the consultants are not to be blamed. Because sometimes when we come all the way, is that investors, when they make money, nobody complains. But when they lose money, here is where the he said, she said scenario happens. So on your point about building investor trust, it's an ongoing process. During the pandemic, all of us had to adapt. There were many ways of us to reach out to people that we've never tried before. For example, when it comes to education of consultants, we used to be able to cater to just 1,000 consultants every year because of our limited budget. But during the pandemic, it has opened the doors for us to go virtual. Today, we are reaching out to about 10,000 people a year at a cheaper price. I even asked my team to gauge over the last 5 years, how many people in Malaysia have we touched base with? Some of them more than one time. The rough guesstimate is about 1 million people through road shows, virtually, through our pamphlets, through our surveys, and so on. So this is an ongoing process to give them that trust that as far as the unit trust and private retirement scheme industry goes, we will continue to do this work.
Now, we've talked about shifting investor profile and all these new technologies that are coming into play. I do also want to point out that, of course, there are shifting regulations and compliance standards as well as we grow and move along. I do wonder, maybe Ridzal could take this question about, as an industry, you have to continue pushing for innovation. You have to venture out of your comfort zone, test new products, and test new measures. But how do you balance, your role to help the industry maintain compliance, maintain standards, while pushing for innovation?
I think my comment would be from a board perspective. We have a very unique board where there are half of the board which consists of CEOs of member companies that have been elected. And the other half of the board are public interest directors. So you have a balance between people that represent industry versus people who are public interest directors. And the structure is designed that way because we want it to be industry-led. If you leave it just to people who don't understand the industry or just purely public interest directors, then your emphasis might be purely just on compliance and regulations, regardless of whether it is beneficial to industry or not. So when you have a lot of input coming from industry, from the board, the issues will always be what is pertinent now. So the discussions in terms of things like SRI and ESG because this is what they need to prepare for. So what are the regulations that we need in order to cater for this? What are the bottlenecks that we see that maybe we need to go and talk to our regulators and ask them to help us with? At times, you might even need to intercede with the government, right? But it should be industry-led, because if it's not, then it's just, it becomes overly regulatory-centric, with people always wanting to just say no to everything, rather than to try and facilitate so that people can do business within a framework which is healthy and balanced for industry as well as for the end investors. So, I mean, if you look at some of these things, when you talk about fintech, for example, you used to have very traditional regulations where a company has a consultant, he is vicariously responsible. If they do something wrong, you go to the company. If you have bots that are actually doing your sales in a fintech type environment, so who's responsible, right? So, I mean, those are the kind of things that you need to figure out, because the situation is evolving, and so you need to adapt to it. Of course, the alternative investments are things that we talk about. We haven't seen any kind of digital coins and such being introduced in the funds industry yet. But, it might not be something that's not too far away. If somebody wants to experiment or consider trying to do something like that. So as the SRO, you should be laying down the framework that enables. And so I go back to the very point that, our board, which consists of people that are in the industry and running the business, becomes very important for us in order to set the tone.
Maybe, Kaleon, will you jump in on the same question here? As someone who has been on the other side, of the table, regulation and compliances, how do you think FIMM can continue to push innovation? As Ridzal has said, it is an industry-led initiative, and perhaps you want to share that?
The pandemic has been a great game changer. I think prior to the pandemic, many people still feel that they need to be physically somewhere. They need to meet up with people physically. Seeing is believing, and so on. But what we have seen is that from the efforts taken by all my members, by the consultants, and even by the investing public, everyone has embraced it to some level. Okay, when the pandemic first happened, we did a quick survey with the industry to understand, are they coping well? Are they adapting well? And we note that there are different stages of preparation done by various parties. But today we can see that everybody is more or less there. Okay, they understood how to conduct their investments without having to just meet physically. And to echo Ridzal's sentiments also, as an SRO, we have been working very closely with the regulators through their digitization working group. We have also been engaging the relevant authorities, like even now when we talk about e-invoicing. And we realize that everyone feels that this is the best time. This is the best time to make that permanent change. The pandemic has given us enough empirical evidence that you don't need to do things the old way. So how I personally feel is that within these next 2-3 years, we will see more simplified methods. But we will also come in and work with the regulators to ensure that the necessary investor protection controls, as far as unit trust and PRS goes, will be there.
Now, I also want to talk about a preview of what's next with the slide on the screen right now. SRI ESG investing has taken off in a big way globally, and it's only going to be bigger. I do wonder, how has ESG and SRI been reflected in the unit trust and private retirement scheme space?
It's been a very good impetus, considering the tough market conditions that the unit trust industry has been facing recently. This is one segment that I foresee will be a catalyst in years to come. About 2 years back, when this ESG SRI framework was announced fully as far as the unit trust industry goes, we asked the industry, how many products do you think you will be able to launch by 2030? And we were very heartened by the fact that the aspiration target was 107 funds. Today, we are only in 2023. We have 66 or 67 funds. We are more than, we have passed the halfway mark in terms of number of funds, and there is more interest from it. I don't sell funds, but from my discussion with most of my members, it's quite evident. It is not just the institutional interest that is boosting this, but also retail interest for it. There is more awareness about the importance of ESG and SRI. So I'm hoping that with the recent Budget 2024 announcement on certain tax reliefs and extension of tax reliefs when it comes to investing in SRI and ESG fund, that will further boost appetite and demand as well as supply for this kind of products.
I do want to stay on the topic for a bit because we talk about, FIMM 30 years and moving on, what's next, right? So we talked about SRI, ESG. Earlier, we talked about fintech. One of the key trends that we've been noticing, of course, is earlier Dato mentioned, blockchain, robo-advisors. How do you think that has impacted the space that you're in, unit trust and private retirement scheme? Are we seeing that type of innovation coming into play in your industry? Perhaps, Kaleon, you want to take that?
We are seeing that. I think many of you here are aware about the presence of digital investment managers, certain investment platforms that make it a lot simpler to invest your excess cash or loose change into the unit trust space. And I say that is good. In a way, it does give some variety, okay? And we have got very successful members who have also embarked on this. If we look at China's mutual fund industry, one of the biggest boosts over the last 2 years came from money market funds, came from all this sweeping of monies and loose change and so on. I think in light of the new investor profiles that we are seeing out there, where young people will be using e-wallets to transact, this is a natural progression. And I think anything that benefits unit trust industry as a whole will be something that is most welcome.
All right. Do you like to add?
Yeah,
that?
maybe I could just add a little bit. This is an anecdotal thing. It happened last year when they have a conference of all organizations like FIMM, SROs from across the globe. And they had it in London, and the issue of SRI and ESG was discussed. And you had the house kind of divided, where half was saying, we are developing countries, we are not ready, we can't do this is too costly. And then of course you have the Western countries and the more developed markets which are obviously embarking on it. What you find with Malaysia is that we have always been financially literate. We have always been quite advanced in comparison to our peers. And we have been very pragmatic in our approach, in that some of these things are happening. Whether you like it or you don't like it, it's happening. And I think the push factor in relation to that is because our client base, our investor base is not entirely Malaysian, right? So there's a push also coming from a more international investor base. So we tend to adapt and move to things where there is a demand and there is a need. The regulations tend to be in place, and then of course the market players will then proceed to introduce their products. Malaysia has never been too far behind the developed markets. And I think if you understand, particularly, I used to do a lot of work within ASEAN, you'll find the level of advancement of Malaysian financial literacy is actually very, very high.
Well, that brings me to my next question then, on the role of consultants, industry players here. What's FIMM's perspective on the role of consultants? Are their jobs at risk of being replaced? I mean, looking at all these tech advancements that we saw on the screen earlier. If not, how do you see their roles evolving in the coming years?
I believe the consultants have evolved and will constantly be evolving as well as far as their role goes. Like I've mentioned earlier, the pandemic was a good acid test. This question on a yearly basis to find out whether there are areas where consultants can do better. Because nowadays, if you look at consultants, some of them are not just plain consultants, they are also financial planners. And they are more equipped, more educated with the necessary skills and tools today to guide their investors. This question about whether their role will still remain relevant or not, I think the very fact that you can still see more people wanting to come into this industry, especially with all this talk about gig economy and so on. I believe that there will be new roles for them to play, and they just have to continuously upskill themselves like any other form of employment.
All right. Well, just a couple of final minutes that we have left. Throwing this out to both of you. What are you most excited about for the industry, unit trust and private retirement scheme? And where do you see this industry can make the most impact when it comes to helping investors? Perhaps, Ridzal, you want to take that first?
Yeah, I think we have a 3-year plan. One of it is embarking on trying to digitize a lot of data that we have. It's been an exercise over a period of 2 years. There have been some challenges, but the exciting part to that, I think, is that this business, like any other business, is about getting a good hold in terms of data, understanding it in order to help our membership. And the closer we get to granularity in terms of what we can see, the easier it is for us to be able to help. So there's data in terms of our membership, of client trends, of product trends, of all these kinds of things which our membership can then use to their advantage. I mean, depending on how they use it. So I think we are transitioning. The one thing Kaleon has been mentioning about COVID over and over again. The one thing about COVID was that it came to a point where you have to change. A lot of the times we'd have board discussions and say, well, let's not do it this year because there's a cost involved. Let's push it to another year and so on and on. But with COVID, there was no choice. You had to change. You had to digitize. You had to connect. You have to increase your infrastructure capability. So I think, for us to be able to digitize a lot of our data going forward will be of great benefit to the industry.
To add to Ridzal's point, again, I'm going to play that stats person's role here. We did ask the industry, how do you foresee things in the short term, medium term, and long term? The gist of it is that everyone is on an expansion mode, which is good. Okay, we just came out of a pandemic. It's nice to know that everyone has got big plans again. But there were several things that caught my eye in terms of educating the industry, getting in young blood, replenishing. And when we talk about replenishing, I think what's key on everyone's mind here is replenishing their retirement savings. So even at FIMM, we've worked with the likes of the Private Pension Administrator, PPA, to make sure that investors who are already in the ecosystem or who is coming in have a fair chance of getting their investments replenished, their retirement savings relooked at. I'm not guaranteeing any form of returns here, but at least through a proper investment channel, which is via the unit trust and private retirement schemes ecosystem.
All right. Well, thank you for that. Big round of applause to both of them for sharing those insights today. Thank you so much, Kaleon and Ridzal. And now we will be moving on to the Q&A session. I think we've received quite a number of questions on Slido. If we can just pull it up in front of my screen. So I have the questions with me. and I will be reading out to all of you here. So, question number 1, if we can. Okay, some of it's cut off by the timer, but is there a plan to have unit trust investment to enjoy tax relief like insurance and private retirement scheme PRS, which will help people to invest?
Fighting for tax incentives has been my biggest challenge for this job. And I believe anyone who takes over my role one day, or my predecessors as well, would understand that it is very taxing, okay? Okay, the thing is that I'm fortunate lah, in a way. I went to LHDN last week to talk about e-invoicing, and I started off by telling them that I have never won a battle when it comes to tax incentives. But the good thing is they are listening now, okay? But we also must understand that the government has got limited coffers. The unit trust industry as a whole does have a lot of tax incentives already. If you look at Section 61 of the Income Tax Act, you would see that most of our income sources are already exempted. And when you pass it on to the investor, it's tax-free in a certain way. Okay? But rest assured, every year without fail in March, we will prepare a pack to go to the SC and work with them on what tax incentives we can get. My only ask is, let's appreciate what we already have, like the recent SRI ESG benefits that have come in. We are also trying to transition towards e-invoicing. We are trying our best to get back exemption from foreign source income, which we have enjoyed for quite a long time. The regulators are listening. They have given us the time of the day, but we won't be able to get the best of all worlds.
So Kaleon has to work harder then to convince. Well, quickly moving on to the second question we have is, this is about sales charge. What is your view on agency channel with sales charge versus digital platforms which offer zero sales charge? Does it mean agency channel will be sunset? I guess alluding to it becoming to ease out?
I think there was this discussion, again, at one of the FIMMAC conferences a few years ago. And I think it was some kind of a survey that they did. There's basically two schools of thoughts. Some people prefer the interaction. They want to meet the sales, consultant, talk to them, that kind of thing. There are others that are even more comfortable. I believe it was a group below the age of 30 where they are actually more comfortable with machines than they are with people. So they don't have any trust issues going into a system to actually buy with zero sales charges. So I think there is space for both. I don't think it will be sunset. I think the issue will be, what kind of value add that you provide. So the important part will be, how you look after the interests of your client, how, you manage or advise in terms of their investments. But yeah, we used to think that just because you have, there are some products that you have to sell, and there are some products which you don't. So unit trust is something that you need an active selling effort. So I don't think this idea of the agency channel being sunset is a real threat at the moment.
Can I just compliment that? We did this fees and charges survey in 2021. The objective of that survey was to actually address whether the unit trust industry is charging a lot of fees, because constantly we will hear debates that you're charging 5% but you don't do anything for us, which is not true, okay? We've gone through that survey and we found out, number one, sales charges are actually on a declining trend, okay? Yes, there are still parties who charge 5%, but there are also many equity funds that are lower. But what's key in that survey is that when someone offers you a service, it comes with certain requirements. For example, if I am a consultant and I decide to charge you, whether it's 1% or 5%, I have to do a certain amount of things for my customer. I have to share the statements, I have to give an update, I have to go and see you, and so on. So there is a list of things that we have listed in that particular survey. So if you have paid for a service, please demand those services. On the flip side, we have also tried to create awareness that, hey, if you want to do it yourself, you want to go online, you want to buy it through a platform or anything, you can do it. It will definitely be cheaper, but you must also be aware of certain responsibilities that you yourself need to keep yourself abreast of. You would then have to check your own statements, you have to download it, you have to understand certain documents on your own. So it comes with a price.
All right. Well, I just got a cue that we have to wrap up this discussion, but I think both Kaleon and Ridzal will be here throughout the day. So, if you can take some of your questions offline, have a chat with them, I think that would work as well.
Sure.
So, well, thank you so much once again to both Kaleon and Ridzal for that insightful conversation. And we hope that you have enjoyed this one. And we have 5 more to go throughout the day. And I hope you stay right up till the end of the day for all those panel sessions. Once again, I think a big round of applause for our speakers today.